At Insightful Value, we uncover value where most investors aren't looking. And Southside Bank Shares is a great example of that. The stock has dipped, the sentiment is low, but beneath the surface, this Texas-based bank could be offering long-term investors a surprisingly stable opportunity. This review is for informational and educational purposes only. It's not financial advice. Southside Bank Shares, ticker SBSI, is a community-focused bank headquartered in Tyler, Texas, with over $8.5 billion in assets. It's been around since 1960 and primarily serves local individuals and businesses with traditional banking services, deposits, residential and commercial loans, wealth management, and more. What makes Southside interesting from a value investing angle is the combination of consistent dividends, strong capital ratios, and low investor attention. While the regional banking sector has been under pressure over the last couple years, think rising interest rates, tightening margins, and deposit competition, Southside has maintained a surprisingly conservative balance sheet. As of the latest reports, the company's net interest margin is around 2.8%, which is lower than its historical average, but not disastrous given the Fed's policy environment. The loan book is diversified with a mix of residential, commercial real estate, and municipal lending. One of the standout features here is the dividend. Southside has not only paid dividends consistently for over 25 years, it has raised them steadily, even through financial crises. The current yield sits around 5.4%, which is well above average and comfortably covered by earnings. Payout ratios are reasonable, and the bank's management has shown a long-term commitment to returning capital to shareholders. On the earnings side, full-year net income for 2024 was about $76 million, with EPS landing near $240. Return on equity sits in the 9 to 10% range, modest but stable. Tangible book value has also been growing slowly over time, and the price-to-book ratio is now below 1, indicating potential undervaluation. So what are the risks? As a regional bank, Southside is tied to its local economy, and that means it's exposed to real estate trends and interest rate shocks. Slower loan growth and tighter net interest spreads could pressure profits in the short term. Also, like many smaller banks, it doesn't have a lot of analyst coverage or flashy headlines, which means investors need to dig deeper. But for value investors, that's part of the appeal. When you combine a low valuation, consistent dividends, conservative risk management, and local market strength, you get a company that may be overlooked in today's tech-driven market cycle. At Insightful Value, we specialize in identifying these kinds of opportunities. We break down key data and explain the story behind undervalued companies like Southside Bank Shares in a way that actually makes sense. No jargon, no fluff. Whether you're a veteran investor or just getting started, we give you the tools to think independently. For more in-depth research on Southside Bank Shares and other undervalued plays, visit insightfulvalue.com. And if you enjoy content like this, don't forget to hit that subscribe button and stay updated with our channel. Again, this video is not financial advice, but it might be the push you need to look into some stocks that others are sleeping on.